New construction sales jumped more than 20% this month to their highest levels since 2022, from 664,000 homes in July all the way up to 800,000 homes in August. Not to mention the prices for new construction increased 4.6%. Existing home sales also showed year-over-year growth, and we're going to cover both of those reports here in a minute. Housing inventory decreased again this week, and we're down to just 18% more homes for sale compared to a year ago. We're covering all this and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas-Fort Worth area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends, we're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. And if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy, sell, or invest here in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is September 29th. Let's see what the data is telling us. And if this is an old video, you can click the playlist here to get to the latest weekly market update. Okay, first up, starting with market news, let's start with the new construction sales report. As I said in the intro, new construction home sales jumped more than 20% this month to their highest level since 2022. Okay, sorry these charts are a little small today. I don't know why they're like that, but you can see back here in July, we had 664,000, and then in August, we jumped all the way up to 800,000. So this big jump is an extra 136,000 sales that happened last month. Now, whenever something jumps this drastically, it is likely there's going to be some negative revision back down next month. But obviously there's a lot more growth here than should be expected this time of year. And it's specifically in new construction because when mortgage rates come down, they come down even further in new construction. So where rates might be 6.2, 6.3 for regular houses, they may be 3.99 for new construction. So it's a huge difference. That's why you see a much more exaggerated jump up in the new home sales. And this also just shows you how big of a deal mortgage rates are. We've not even gotten down to 6% rates yet, and you can see how many more buyers are waiting on the sidelines. Then median sales price also increased. This is a 4.6% increase, but that could also just be seen as the normal fluctuations. You can see big ups and downs here are normal. So this looks like a totally normal swing. We would need to wait and see a few more reports to see if this is an actual trend developing up, which I don't think it would be yet. And you can still see overall the trend has been down since, this peak was in 2023. So it's been a very slow, small trend down. If you were to draw a line right through the middle of all these dots, we'd be pretty close to the average right now. So we never rely on one data point. We need to only be looking for trends. And so far this trend is still down since that peak. Then month supply, you can see, was trending up. It had a big drop down. So I would say that is a break in the trend as far as month supply. And that's down to just 7.4 months, where it had been over 9 months was the peak. And month supply just means with the current sales pace, if no new listings were to come onto market, how long would it take to sell out of all the houses? So right now it would take 7.4 months to sell out. And the reason this number is always higher, if you look at existing homes, it's like 4 point something, is because in new construction, they also factor in homes that are built that are not completed yet. They include that in the month supply. So massive jump in new construction sales this month, which is very unusual for September. That's 100% due to rates. Just keep in mind, with a huge jump like that, it's probably going to be revised down, but it's definitely not something to ignore. Then we have the existing home sales report, which is nowhere near as impressive, but that's because, like I said, new construction mortgage rates that led to all those sales are down closer to 3.99 for a lot of that time for FHA rates, whereas existing homes, even currently for FHA, are working off like a 6.1% rate. So it's really like looking at two totally different markets, because we're talking about a 2.11% lower mortgage rate for new construction right now. But again, this is just showing you there's a lot more buyer demand waiting for lower rates. But in the existing home sales report, we had a 1.8% increase in sales year over year, which is also a 0.2% decrease month over month, for a total of 4 million sales last month. So existing home sales have grown 1.8% since last year, but that's not really impressive because we're working off such a low bar. And you can see it much more clearly here on this chart. You see this little squiggle happening right here. That's all we're talking about. And in fact, this started down here back in January of 2023. We've just been building a strong bottom here that we're eventually going to spring out of once rates drop. But as you can see, a 1.8% increase is nothing when you zoom out. We're still almost to the bottom of this range, even with a 1.8% increase. And let me just ask you, if this chart were your favorite stock, would you be looking at this saying this is a great time to buy or a great time to sell? Do you think this looks like it's more likely to continue back up or to break down lower? Because if you're looking at any stock chart, you would say this is clearly a support resistance flip, and that it would take a whole lot for this to break downward. And I just don't see any evidence of that with rates actually finally about to start dropping. Also, rates just had their really big drop in the middle of this last month that happened. So the bulk of that new demand is not gonna show up in the data for another 1 or 2 months. And NAR actually also released a pending home sales report as well. And it was showing that pending sales are up 4% nationally, month over month. So those sales won't show up in this closed data until at least next month. But 4% month over month is a big deal, and it's due to even lower rates than this data that we're looking at now. Then the last chart I want you to see is housing inventory. I just feel the need to show this every time for all of those accounts that are saying a housing crash is coming and the inventory is at an all-time high or whatever. If you just zoom out, you'll see housing inventory is still insanely low. The problem is most of you only remember the last 5 years. We just have a short memory span. So yes, inventory is high compared to everything after COVID, but compared to all of history, we don't have near enough houses to keep up with normal housing demand, or if mortgage rates get back under 6%. This is not concerning at all. You see back here in 2008, this is a concerning level of inventory. This is not. Okay, now moving on to my property showcase for the week. This week's home showcase is a great little starter home in Fort Worth, and I've been showcasing these because they're so affordable, and if you're looking for a great deal, this is important because this builder is actually discontinuing their smaller plans in this community because they have pretty big lots here, so they want to build bigger homes. And when they discontinue smaller plans like this, it means they're also ready to get rid of these quickly, and they care less about what price it actually sells for because it's not going to be used as a comp for any plans moving forward. So if they sell it another 10K less than the last one, the next buyer can't then come in and ask for 10K off because this plan won't exist anymore. So they're more likely to give a discount. So if you're in the market for something like this, it's only 15 minutes from downtown Fort Worth, and you should make an offer on this one. It's got 3 beds, 2 baths, a huge covered patio, a big island, gas appliances, separate tub and shower, and the next phase of this community, they're gonna build a big sport court so you'll have pickleball and all that. It's currently listed at $329,900, but if you're interested, just call me. If we make a reasonable offer, I think there's a good chance they take it. Also, they're giving a 4.99 rate and paying your closing costs. And they also have one smaller and cheaper plan that they're looking to get rid of as well because it's being discontinued. I'll be posting that one on Instagram in the next few days when I have some time. But you could get that one really close to 300 and it has a huge backyard. Okay, moving on, starting with national housing inventory. This week we had a decrease of 258 less homes for sale in the country, which is basically flat, just like where it's been the last 3 weeks or so. But just remaining flat actually drops us another 2% to just 18% more inventory than we had last year. Remember, earlier in the year, we got as high as 33% more inventory than last year. Now we're all the way down to just 18%. But we have 862,575 homes available for sale in the country, and this same week last year, inventory was only at 731,010. So we're still much better than last year, but that gap is closing every week right now. Then for reference, the inventory bottom here of 2022, we only had 240,000 homes for sale. At the peak of last year, we had 739,000 homes for sale. Then looking at new listings, something is wrong with this chart and these dots are not updating. So I can't accurately give you the info compared to last year this week until that dot updates, but I can tell you this week we had 65,078 new listings, which looking at this dashed line is for sure well above the previous years, which is great news because as more buyer demand comes in from low rates, we will need more listings, and so far it does look like we're getting them, as this week's dot should be up here. So as long as this continues where we have more new listings coming on while buyer demand comes in, that will be a good thing and it will keep prices from going up. And hopefully this chart starts working next week. Now moving on to the new single family contracts is how you can look at the weekly pending sales. This week, new contracts increased by 761 right here, which also gives us 2,576 more homes under contract than we had last year. That's this gap here. And if you look for most of the year, we're above the previous year, and that's just one other way to see that sales are growing year over year. The last thing we cover nationally is the percentage of homes having price decreases. Every year it's normal for a third of homes to take a price cut before selling. Looking at the national chart, we had a tiny increase of 0.1%, which to me is the same as flat. It looks exactly like we have been for the 4th week in a row here. So 41.6% of homes took a price cut this week. I think it's likely that back here was the peak of price cuts for the year, especially with rates coming down. I think what we can expect for the rest of the year is a similar trajectory here, where we go a little sideways and then end the year somewhere around here. But last year we got as high as 39.9%, the year before 39.2%, and in 2022, when rates got all the way up to 8%, we got as high as 43.2%. And just so you know, if you want home prices to be coming down, this number would need to be continuing up. Okay, moving on to mortgage rates. We started last week at a 6.35. We got as high as a 6.39, and we started off today again right at a 6.38. So you can see for one day, we got all the way down to 6.13. That was incredible. And then ever since, we've been around pretty close to 6.4. Then looking at mortgage purchase applications, this week we had a 0.3% increase in people applying for mortgages, which puts us at 18% year-over-year gain in the number of people applying, which gives us 31 straight weeks of positive year-over-year growth. But I've been saying for more than a year, I still believe that we're not going to see real mortgage demand come in until rates get at or below 6% for a sustained period of time. Again, we're still at 6.4%. So we've still got quite a ways to go before real demand comes in. And you know there's going to be demand there because you can see it in the new construction numbers where they're offering 3.99 to 4.99 already. Okay, now moving on to the local markets, starting with the MLS data of Dallas County. This week we had 541 new listings, which is 28 less than last week. So that's 3 weeks in a row of new listings dropping here in Dallas County. We had 307 closings, which is 56 more than last week. That's very high actually, but remember that's reflecting data from about 30 days ago. So about 30 days ago, a lot of people were contracting, they're closing today. Of the homes closed, 41 were immediate sales. That's 2 more than last week. New contracts this week, there were only 261, which is lower than we've been seeing. That's 37 less than last week. Although I guess that's what we were seeing here, 279, 268, 288, not too far off. But in total, we have 2,135 homes either under contract or pending, and that's 47 less than last week. Looking at the same thing for Collin County, we had 447 new listings, which is 57 more than last week. So Collin County is actually close to the top end of new listings. Just like Dallas, they had a big jump in closings, 315 closings, that's 67 more than last week. Of the homes closed, 36 were immediate sales, meaning they contracted in the first week. And like Dallas as well, they had less new contracts last week. They only had 168, which is 33 less than last week, but you see 178, 157, 190, not too far off. And in total, there were 1,941 homes either under contract or pending. That's 40 less than last week. Okay, now moving on to the market action index, starting with Dallas County. If you've never seen this, it takes into account all this data, puts it into one easy to read graphic with a number. Anything at 30 or below is a buyer's market. Above that, we're asking how much of a seller's market are we in? And we just use this to see, are things looking normal or are things looking weird? What should be happening really for the rest of the year is the whole market should just be cooling off slowly. And you can see ever since the summer, the trend has been cooling off on the market action index. We're down to a 35, technically a 34.56. So nothing unusual about that. We are still at a slight seller's advantage. Median list price has climbed since August 22nd, but you can see the last week it came down. It's still pretty close to that 400,000. But overall, you can see the trend in price has been down. I don't know why we had such a sharp drop, but we came back up some. But overall, just a smooth downtrend if you average all this data out. Median price of new listings, however, is still kind of at the top of its range. So no real drop in the median price of new listings. Average days on market increased by 3. Not unusual. Median days, this only goes in 7-day increments, so it did jump to the next bracket, which is 70. That just happened this week. But again, all of these things are just showing a cooling market. Homes having price decreases were well below the peak back on August 1st, but we have increased a little bit. That would not be unusual either, as for the last 3 years, price decreases have actually been going up until about October, November. So even if we were to go up until October, November, that still would not be unusual, would just be normal market activity. Housing inventory, however, has had a big jump since it spiked down. We're still not above our peak, same as the national market. We had a peak and we've been climbing back up, but we've not gotten back up there yet. I think it's unlikely we're gonna get there, but we're not too far off. And yeah, the market action index is 34.56, so nothing really unusual here. Things are cooling off as they should be. We're not seeing anything, nothing looks like it's crashing or breaking. It's just this is what it is this time of year. Looking at Collin County, they're only at a 32, which is a slight seller's advantage. Remember, 30 or below is a buyer's market, so 32, not a hot market. Their median list price had a pretty quick trend down, and they've been flat for what, like 4 or 5 weeks now, right at 525. And their median price of new listings, where Dallas was at the top of the range, theirs is actually below. They had a new low this week in the price of new listings. Their average days on market climbing as well by 3. They're up to 96 this week. They have already been at 70, which is where Dallas just got. They got there a week ahead. Number of homes having price decreases has not hit the peak yet, but it's getting up there, getting close, just like the national market. Their housing inventory, however, is continuing to decline. So that is interesting. Whereas Dallas and nationally, we're right back up to almost the peak, Collin County is still declining. And then of course their market action index is down to a 32.23. So overall, everything's looking pretty normal other than their inventory is still going down, but this is still a lot of inventory. So it's going down, but from a very high bar. All right, now moving on to the hottest and coolest cities and zip codes in all of Dallas and Collin counties. These are ranked using that same market action index number we just looked at. The absolute hottest cities, let's see, Carrollton, DeSoto, and Coppell remained in their top 3 spots this week. Hutchins heats up 4, Grand Prairie remains, Lancaster cools off 2, Grapevine cools off 1, Irving cools off 1, Princeton jumps on at number 9, and Garland jumps on at number 10, and then Saxe, which was number 8, and Richardson, which was number 10, both fell off the list this week. Then we like to zoom in at specific zip codes. The absolute hottest is Irving at 75061 at a 45.98, followed by Grand Prairie 75052, Carrollton 75007, Dallas 75206, Dallas 75249, Garland 75041, Lancaster 75146, Carrollton 75006, Dallas 75234, DeSoto 75115. So if you have a home in one of these zip codes, you should be able to sell for top dollar. Now moving on, same thing, but the coolest cities and zip codes. The absolute coolest is actually Leonard, Anna, Royce City, Prosper, and Whitewright all remained in the top 5 spots this week. They didn't move. And then Salina heats up 1, Rockwall cools off 1, Sunnyvale heats up 2, Nevada cools off 1, and Van Alstyne cools off 1. And remember, all of these are below a 30, which means they're all buyers markets at a city level. Same with the zip codes we're about to look at. Everything on here is a buyer's market. So the absolute coolest is Leonard 75452, then Anna 75409, Dallas 75233, Royce City 75189, Prosper 75078, Whitewright 75491, Rockwall 75087, Salina 75009, Sunnyvale 75182, and Nevada 75173. Remember, if you're looking to buy, sell, or invest here in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. Just call, text, or shoot me an email. All that is in the description below. Thank you for watching. I'll see you in the next video.